Good morning and welcome. Happy Friday. I'm Joe Jaquin, CEO of the Patriot Trading Group. The Jack Daniels is flowing on this Friday. 800-951-0592 is the phone number. You know you need to call. Right? Gold's got the rally caps on. AllAmericanGold.com is the website. And wow. Where do you start? Right? Gold up, depending on where you look, up anywhere from $5 to $10. And you know, I think like Kitco, our website, will tell you gold's up like $10, $10, bouncing back and forth there. And then from the New York close, gold's up like $5. What you need to understand is the price is still the same, right? We're sitting here $13.98, $13.99, $1,400. Gold, well, we were actually before we were even in bed, about 7, 8, 9, from 7 to about 11 o'clock last night. Gold had breached 1,400. The silver markets today retested that 1525 level it's held. It's held that level. Obviously, the day's not over yet, but very good sign there for the silver markets as well. Got a great show. Listen, great show lined up for you. We're kind of watching all of this play out. The thing that is the most interesting, not the gold rally. It's not. Listen, gold was way underpriced. I mean, really, think about it, right? And I say this all the time. Listen, I'm only wrong for a little while because I don't take things, right, what happened in the last 15 minutes, right? I'm telling all of you, listen, take a longer-term look at what's happening. You know what's happening, and you know what you need to do. Now, you can pretend. You can stick your head up your backside and pretend it's not happening. Listen, that's what 99% of the people in this country do. Don't be those people, because it is happening. And we're just starting to see it again, right? The central bank, they do it time in, time again, right? Oh, no, we fixed it. Only for you to realize they didn't fix anything. Matter of fact, we're worse off today than we were before. I mean, honestly, really what needs to happen is the central bank needs to go away, and I think it will. Problem is, it's going to wipe you all out unless you're ready and unless you have gold and silver put away. You're going to get wiped out. Trust me on it. I mean, we're running a deficit. It's not $1 trillion. It's $1.7 trillion this year, and we still can't grow, right? We gave the biggest tax cut in the history of the world to these companies, and guess what now? They're finally realizing what I told you when it first happened. They're just going to buy back their own stock. They're not going to employ. They're not going to be building. They're not going to be spending money, and guess what? That's exactly what's happening. Right, we can sugarcoat it all we want. The president can't force them to do it. I wish he could. Right, is the one thing. Remember when we talked about the tax cut? The one thing I always said all along. The part I hate about it is the business one. Right? Hey, I'm okay with giving them a tax cut, but you actually got to either spend the money paying your people or spend the money actually doing stuff here at home, not buying back your own stock. And guess what? It's what they did. It's what they always do. Got a great show lined up for you. Coming into the next segment, we're going to play not one, but 2 clips from the Idiot Box. You know what? Every once in a while, they'll actually tell you the truth. And they did it today. I'm going to play them for you. You need to hear it. You need to get ready. And then after that, I'm going to give you my low, and then my most likely, and then my high side predictions for the gold markets for 2019. Okay? Because after looking at the charts, I've spent the last 24 hours since the last show combing over data, looking at it, re-looking at it. So I've got an update on where gold is headed. So stay tuned for that. We're coming up next, though. We're going to go right to the idiot box. Because, right, never before. Wait, we cut rates? We haven't done it yet. But, essentially on Wednesday they cleared the deck, right? They set it up. They can cut rates now at any time, right? Because that's how they have to do it. This is the myth. Oh, well, before we do it, we gotta lead everybody up to it, blah, 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 blah. So now they're ready, right? They won't surprise anybody with a rate cut. Stocks are at all-time highs? Right? And you remember on Wednesday I was talking about the smell test? Something doesn't smell right. Guess what? When we come back, some other people don't think it smells right either. And like I said, listen, don't take my word for it. Never take my word for it. Always do your own research. Be your own central bank. And today's going to be one of those great shows here on a Friday. Sit back, relax, strap on that seatbelt, leave the driving to me. We're going to be right back. Welcome back. I'm Joe Jakewood, CEO of the Patriot Trading Group. And if you're just joining us, gold is up again. Sitting right around $1,400. And before the break, we were talking about how can this be? How can we be getting ready for rate cuts with stocks at all-time record highs? It defies logic. Right? It doesn't make sense. It's a very dangerous time. So one of the things, and we've said this for a long time, Wall Street does not reflect the economy. That's not what it does. It used to do that. Doesn't anymore. Right? Wall Street really is a debt instrument. That's really what it is. You know what it reflects? It reflects, hey, how cheap's debt? Right? And unfortunately, what that leads to, right, we talk about, right, the peaks and the valleys, right? These self-induced crashes that have been set up by the central bank. This is what we talk about. Because what is their solution? Every time, what is their solution? Let companies go bankrupt? Right? Make them pay the price? No. It's not their solution. Their solution is what? Let's bail them out. Right? And bail them out, obviously, right? We saw it last time. They bailed them out with actual money, right? Or they bail them out with all these super ridiculous interest rates and allow them to stay in business and double and triple the size of their balance sheets. And let me tell you right now, that was what they did with housing. That's what happened. Right? They created this bubble in the housing market. They called it liar loans and this and that. They lent money to people they shouldn't have lent money to, which drove up the price of all the values. Same thing has happened here in Wall Street. You just don't know it quite yet. But don't take my word for it. So today on the Idiot Box, not once, but twice, Jim Cramer wanted to let you know what the truth was. Jason, let's play the first clip.
G20. I also think that yesterday was a day where there was a frenzy of froth and euphoria that I haven't seen in a long time. We had a lot of stocks up 7, 8, 9 points, and nothing had happened. I think we're all starting to realize there's going to be IPO fatigue pretty soon. I mean, how many more companies that are $20 billion can this market sustain? I was saying last night on Mad Money, okay, I'm cautious. I gotta be. I don't want to be. It's too much fun. And it really is it's an amazing time because what is the Fed doing cutting while the stocks are at an all-time high? Well, the answer is that the Fed isn't cutting, but the Fed is prepared if business investment continues to deteriorate. Now, a lot of the stocks that are going up in this particular leg of the market are the ones that go up when we're about to go into recession. So I don't understand why when people think of the market, it's dumb as wood. That's not the way you should be thinking. The stocks that are going down are the stocks that are economically sensitive.
Right. So,
and that makes sense.
So real estate, utilities continue to lead the year, really, right? Best performing sectors.
Yield. Some of the real estate investment trusts, Ventas has been one of the hottest stocks. What is it? It's senior living, but it's got an actually good yield. And I think that we have to start accepting the fact that the stocks that are leading this rally are the Procter & Gamble's. And Procter & Gamble does not go up when the economy is on fire.
And therefore,
well, I'm just saying
pause.
I'm saying that therefore this time, I think this time Powell's doing the right thing. I think Powell was listening to the 27-year-olds that surround him, okay, that make all those books and stuff, who call people and say, hey, what's shaking?
Buy small biotechs.
Hey, how's the bomb, man? You guys are the bomb. Yeah, small biotechs. And he's starting to actually speak to real executives, and real executives are saying, hey, listen, it's not as good a quarter as last. We have a slowdown coming. The inflation, we can't raise prices, and things aren't that good. They aren't as good as last quarter. And I think what he's saying is, well, if they're not as good as last quarter and things are deteriorating, I'm not going to focus on the S&P 500. I'm going to focus on the fact that there's going to be tariffs on the next $300 billion. There's no indication that there won't be. No. There isn't.
No, there isn't.
No indication whatsoever.
And there's certainly got to be indications that it is slowing growth.
Yes,
it's slowing decision-making, or it's stopping certain business that would have otherwise occurred. I keep running into it even in my M&A reporting. I'm on the phone with a banker who says we were about to do a deal. Huawei, though, is a 10% customer of this particular company. No deal.
No deal. And
other companies looking as well because they sell to Huawei saying, I've got to change my customer base. How am I going to do that?
I know.
These things do
They're
have an
very
impact.
important, and it's not the economy that is trading higher. Look, I deal with all the rails. The rail business, I mean, carloads are carloads. They're down. They're down appreciably. Every single line.
So let's just break this down. And we got the next clip coming here. But let's break down what he just told all of you. The stocks that are rallying are not the stocks that rally when the economy is good. That was number one. Number two, he talked about the young kids talking to Jay Powell. What he means is at the Federal Reserve, right? They are calling, they have these, the younger hires. I'm fresh out of college. I've got my PhD or my master's degree in mathematics or economics or whatever. They call the CEOs. Hey, it's Schmuckatelli over here from the New York Fed. How you doing today? Huh? How you doing? Hey, tell me, how's business? Right? And the CEOs are like, hey, not as good. Right? It wasn't that good last quarter, and this quarter's even worse. And, by the way, next quarter, it's going to be even worse. Of course, right? No, you keep getting this fantasy land of this second half recovery. It's not happening. Right? And Kramer has said that Jay Powell is finally listening to them. Right? And here's what's funny is this has been the message. And I've been telling you this since the fall of last year. I told you something changed. The economy is slowing. Taking a little while. Remember, right? I may not be right that second, but I will be. And now here it is. And he said, hey, they haven't cut yet. Which I kind of think is his precursor to, hey, Wall Street's going to start falling here pretty soon. Right? Because the earnings reports and the guidance aren't going to be there. And then lastly, he talked about, I talk to all the rails. And he used the carloads are carloads or freight loads are freight loads, that expression. They're down. And I told you this the other day. And you heard what he said. They're not just down. They're down big. Real big. And so he's kind of, and he said, hey, I'm cautious here, right? I'm in other words, hey, the market is the market, but the market isn't what the real economy is. And sooner or later, the market is going to realize that it's mispriced. Let's play the next clip. Go ahead, Jason.
New York Stock Exchange, Jim Cramer joins us now. You always have something unique, Jim, on your radar, or you can just follow on to the conversation we've been having. New highs yesterday. God almighty. People were pretty negative for the last month.
I think that's one. Yeah, and that was wrong. I mean, I think that when you lower rates or about to lower rates, there's a lot of stocks that go up and join the party. I do believe there's not a single company I talk to that is going to have a stronger quarter this quarter as they had the previous quarter. And I think that's one of the things why, if you're Jay Powell, you're paying attention to real companies, not necessarily some beige book or unnecessarily linked to employment. I mean, when I literally do not have a company that is having a better quarter. And I speak to, dozens of CEOs. So you could say this. I would rather say the stock market's wrong than I would say the real economy's wrong. But
really?
There's a lot of companies in these averages, remember, that do spectacularly in a slowdown. We forget how many companies we have that do well in a slowdown, like CarMax today. Great numbers. Why? Used cars. I mean,
Jim,
there's a lot of stuff that does badly in a slowdown.
Quarter to quarter, or
bad.
Sequentially, or year over year?
Sequentially.
So you don't mean year over year?
A lot of it also is the dollar, but sequentially, I mean, year over year is the dollar, but sequentially, yeah. I mean, it's just not a good quarter. Not a good quarter in retail, not a good quarter in lending, not a good quarter with any of the materials, not a good quarter with anything related to housing. The only part of the economy that's really doing well are some of these companies that help other companies do things like a Slack. And that's, look, I think the real world is much worse than the stock market indicates.
But if the most cliche thing in the world, lower rates means expanding multiples, so maybe you can hit, maybe it's not about the E, maybe it's about the multiple that keeps
Amen.
Us. Is that it?
Amen.
Yeah,
amen. Right? Talking about, with lower rates, we can have, the myth, right? We can have higher multiples because these rates are down. Because, again, remember, it's not about the economy. It's about debt, right? And it simply can be put. The real economy is not wrong. The market is wrong. And you look at all the warning signs, and we see them over and over and over again, and I break them all down for you. I tell you about them every single day. So today, we got the manufacturing PMI. And this has been one of those darling reports for the last couple of years, right? We're manufacturing's back. Not really, right? The big number is in watching most of the manufacturing stuff. We had let's not lie about it. We had a bump from the tax cut a little bit. That's gone. Let me give you the numbers today. This was today. The Flash U.S. Composite Output Index hit 50.6. Okay, now, anything above 50 is expansion. Anything below 50 is, the opposite, right? Dare I say recessionary. We're at 0.6 now, 50.6. That's the lowest number in 40 months. Okay, so you're talking about before Trump got elected low. The U.S. service business activity, 50.7. Also a 40-month low. How about the service PMI business expectations? Now, here's a funny number, right? Because this is a number that's never been negative. Never. Really, not even close to negative. It came in at 57.8. And you're thinking, hey, that's pretty good. That's way above 50. I mean, not way above, but it's above. That's the lowest reading on record. One of the other things that I didn't talk about that Kramer said, did you hear the China thing? Did you hear it? Did you hear it? There's no deal. There's not going to be a deal. Right? They know, right? But yeah, you know what's so funny? He says that today, but think about for the last, year and a half, how many guests have come on that network talking about we're getting a deal, we're getting a deal, we're getting a deal, we're getting a deal, and he's sitting there saying, yup, 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 yup. He's known the whole time. Manufacturing PMI, 50.1. That's the lowest in 117 months. That's like what, 10 years? You better wake up. Let me give you the number. 800-951-0592. We'll be back.
This is the Phyllis Schlafly Report, a daily broadcast launched by Phyllis Schlafly, who served as an articulate voice for traditional values for more than 70 years. Upholding that legacy and himself an author, national speaker, and attorney, here's the president of Phyllis Schlafly Eagles, Ed Martin.
Marriage is a beautiful institution that every American should celebrate. So often, political rhetoric and pop culture have distorted the visage of what marriage should symbolize. Some see marriage as just a religious symbol, and certainly you can't separate marriage from its Judeo-Christian roots. Some see marriage as just a legal document, and it's indeed a legally binding contract. Some see marriage as an excuse to spend thousands of dollars on a big cake and a dress, and that happens a lot too. Still, marriage isn't just a symbol or a contract or a celebration. The institution of marriage affects each one of us every day, whether we're married or not. Marriages are what make families, and families are the foundation of our society. That may be something controversial to say today, especially in the love is love generation where the word family is thrown around so flippantly. If you turn on just about any television drama, you would think healthy families could be made out of just about any combination of people who happen to live under one roof and happen to say they love each other. Yet the ties of marriage are stronger than any human emotion. I don't say that because I think marriage is somehow magical or nostalgic. I say that because the facts back it up. Studies have shown time and again that families with a married mother and father in the same home are healthier and happier. Their children will perform better in school, be less likely to commit crimes, and be well-adjusted and productive citizens. That means a better America for both today and tomorrow. When you consider the institution of marriage, don't think about it as the culture portrays it. Think about it as God intended it. Two of his first commands to humanity were to leave your father and mother, to cleave to your spouse, and to be fruitful and multiply. Before God made government, he made marriage. As Christians and as Americans, we have many reasons to rejoice in marriage. I hope you join me today in celebrating this important and sacred institution.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. The traditional family is the building block of our communities and country. That's why it's imperative to support strong marriages, respect fathers, and champion stay-at-home moms. At phyllisschlafly.com, we oppose the liberal attempt to redefine the family. To join us, visit phyllisschlafly.com. Thanks for listening, and join us again next time for the Phyllis Schlafly Report.
Welcome back. Patriot Radio News Hour, 800-951-0592. That is our toll-free number. So we heard from the Idiot Box today, Jim Cramer, not one single company that he talks to is having a better quarter this quarter than the last quarter. It's funny. Yet stocks are at all-time highs, right? Remember December? Right? I told you, December, that was just a warning. That was a warning. Remember the inverted yield curve that they sit there, oh, no, it doesn't mean anything this time. It's been something, all the other times, but not this time. And who was it? Morgan Stanley, one of the big guys, said, you know what? we've taken this into consideration. And when you do that, the yield curve actually inverted, right, back in December. And that when that happens, within a year, you enter a recession. And so now here we sit, right? We're in June, right? Jim Cramer comes out on TV. I don't know where he's been, right? All of a sudden, no one's having a better quarter. Nobody. And it's starting to look like this may be happening. And then you see gold, right? Gold takes off, right? And again, this is just how it is, right? The debt markets, right? They have to do it this way. No, we fixed it. We got to be right, right? And they cheer and clap and yay, right? And nobody wants gold and all that stuff. And of course, when it happens, the markets, right, are the last ones to realize it. So take it for what it's worth. But as I told you before the break, I want to give you my low water mark for gold, what I actually think it's going to be, and then the high side. Right? Now, and again, this is just my opinion on it. I spent all of the day yesterday going through the charts, breaking down the numbers, looking at it all again. Right now, I think the most reliable, conservative, I think 1535 is, hey, we get 2 rate cuts, right? I think that's already baked in. And this is gold now, 1535 on gold. I think that's baked in. I think the more likely number is 1598, or let's call it 1600. If we get 2 rate cuts, one of them being 50 basis points, and or a third rate cut, either way, and China ends up the way I think it will, which is no deal. I think this is let me tell you, this is quite possible. Then we're probably looking at a target of about 1689. Worst case scenario, right? We're looking at all-time highs again. Because remember, as I told you yesterday, what the difference is between, you look at $1,535, which is kind of my low. I think that's kind of baked into the cake number, and $1,800. Okay, $1,800. That's a $265 difference, right, between those two numbers. When you go through the data and you look at the charts and you look at all of those, of that $265 from my low to my high, that 1,800, getting ready for all-time highs, 195 of it comes with very little resistance. From 1,600 to 1,800, there's very little resistance. Just like there's very little resistance from 1,400 to 1,535. So this could very easily be one of those years where you sit there and you look at gold and you say, man, how did this happen? And the answer is really very, very simple. We had a debt problem. Gold told you had a debt problem. We tried to fix that debt problem with what? Smoke and mirrors, more debt. And then once they said we fixed it, see, Here's the problem with the more debt. If you don't get the more sales to go with the more debt, then all of a sudden the more debt isn't the solution anymore. And that's what we are seeing right now. That's what we have here right now. So when we look at where is gold headed, I'm hoping we get a little bit, and it's not going to be a straight line. We're going to have some consolidation here, right? We're going to consolidate the gains that we have. And then when we get to 1535, we'll consolidate again. Then when we get to that 1600 level, right, then we're going to be looking at, okay, what is 2020 looking like? In other words, remember Paul Tudor Jones, Ray Dalio, Stan Druckenmiller, right? Jeff Gundlach. They're all telling you the same thing. Hey, we're not stopping at 1 or 2 rate cuts, right? If we're setting up for where they say we're going, gold's going to hit new all-time record highs, period. Significantly above where we're at. I mean, it just makes sense. Today, do we have somebody lobbying for Jay Powell's job? A non-voting member of the central bank. Remember, yes, I told you some guys get to vote, some guys don't, and it rotates. Came out today and said he was rallying in that meeting for a 50 basis point rate cut. I'm going to tell you who it is, what it means, and when we get back, another great opportunity to get into this market. 800-951-0592. That is the number to call. Get ready. Get ready to put some more material away before it goes even higher. We'll be back right after the break. Welcome back. Patriot Radio News Hour. 800-951-0592. Depending on where you look, right now gold's $13.94. $13.94. It's been as high as $14.06. That was last night. The Wall Street, NASDAQ's down, S&P's down, Dow's up 30. Got a really, just got this email about 15 minutes ago. We have an opportunity to buy 50 $20 Liberties and 50 $20 Saints. But this is a grade which really has always existed, but not really until this year. They call it BUCU, right? BUCU is the grade. And what that means is, BU brilliant, uncirculated. These are actually uncirculated coins that would normally be sent to PCGS and or NGC to be graded. But because the spreads are so tight, and like everything else, right, they say there's no inflation. But yet the grading services, everything costs more. So even when the largest wholesaler in the world in gold, because they'll send them 100, 500, 1,000 coins at a time to get graded. They told me the other day the cost that they get, cost, if I was to send back, I may send back 3 or 4 coins, right? I'm getting charged full price, right? Even at the discount, the cost to grade coins has doubled. So it no longer makes it worth it to have them, after paying the grading service, for it to come back and be graded Mint State 61 or Mint State 62. It's not worth it. So today, I just got the email. They're offering 50 $20 Liberties. Those are the older ones, 1866 to 1907. And 50 $20 St. Gaudens. Right, that was from 07 to gold confiscation. So these are coins. These will be the nicest coins we've seen. Right, that normally would be coins that would be sent out to be graded. But because the spreads are so tight, it's not worth sending them out to be graded. So they're offering them to us today. Our ungraded, our regular coins are $14.90. You pick it. I don't care. You want to do all Saints, you want to do all Libs, you want to do some Saints, some Libs. However you want to do it. There's only 50 of each. $14.75. So you're essentially getting a coin that is gradable for $15 less than the ungraded. These will be the nicest ungraded coins you're ever going to see, right? As far as, hey, they're loose, they're not in the hard plastic case. These things are going to be gorgeous, right? They're not going to have a lot of scratches. They're not going to have a lot of dings and dents. None of that stuff. They weren't made into jewelry. There's not going to be any solder on them or copper spots. These things are going to be magnificent. $14.75 at 800-951-0592. That is the toll-free number. Take the time. Put them away. I mean, think about it. We're talking about, what, $1,535 to $1,800 to end the year in gold. The breakout that we've had right now can't be understated. Is it going to be a straight line? No. But the thing about it is, when you really look, don't take my word for it. Listen to what Kramer said. Not one company's having a better quarter. I talked to every rail company in America. Right? Loads are loads. And there's just a lot less loads, period. Right? It's not there. The volumes aren't there. Look at what I did on the PMI. All-time record lows. 117-month lows, 40-month lows, right? It's happening right in front of our eyes. And again, it always ends up the same way. It's gradual at first, and then all of a sudden, there you are, right? And that's kind of what happened in the gold market. All of a sudden, all of these guys that thought, hey, we're gonna get a trade deal, and we're getting the quote unquote insurance rate cut. Now they don't think that way anymore. Now they're talking about, wait a minute. All of these CEOs are now saying things that we weren't expecting. Because you got to remember, second quarter's over. It's over. They already are looking, hey, we know what the third and fourth quarters are going to be. Get ready. This is not going to be a one rate cut deal. When we get back, we're going to talk about, by the way, I want to correct something. Yesterday I said it was the Chicago Federal Reserve that dissented. I was wrong. It was the St. Louis Fed. It wasn't Evans. It was Bullard that dissented this morning. Minneapolis Federal Reserve President Neil Kashkari. This is very important. He was a non-voting member. He wasn't arguing for a quarter of a point. He was saying we needed to cut 50 basis points, and we needed to have done it at this meeting, and we didn't. Is he going to be the next head of the Federal Reserve? Maybe. We'll be back. Final segment coming up. 800-951-0592. There are two lines open. I don't have an update. I don't know what is left. We had 50, not AU, BUCU, $20 Liberties and 50 BUCU $20 Saints. That's all we have. And I don't have an update. I know that we are definitely selling them. Do not wait. Get your orders in. These will be the nicest coins that haven't been graded. This is only the second time in the 16 years that I've been doing this that these coins have been available. Because normally they send them to be graded. The problem is, right, if they got to pay $15, $20, even in bulk to get coins graded, but the spreads are so tight that it's not worth it, all of a sudden you get to have it. So these will be the nicest $20 gold pieces, right? The scratches, the dings, the nicks, all that stuff that's not going to be there. 800-951-0592. They're $15 less than our ungraded coins. You think about gold, $13.95 right now. So you're talking about what, $80 over spot? I mean, are you kidding me? You're just not going to get that type of value anywhere else. 800-951-0592. Neil Kashkari, I think he's making a play here. Right? Remember, now, Neil Kashkari came into our lives as the head of the bailout guys, right? Remember, we put him in charge of bailing out General Motors and bailing out Chrysler. That was him. His reward was he got named the Minneapolis Federal Reserve chief. Now, I think all of us agree, right? Jay Powell, when, Trump wants to replace him, I don't know if he's going to be able to get that done. But his term, he's a one-termer. Neil Kashkari, I think, making a play, came out, wrote a big article about how he was lobbying at the meeting for a 50 basis rate cut. And I'm going to tell you right now, when they talk about, inflation is low and all these rate cuts. Listen, the 10-year note, the 10-year note's sitting at, 2%? Has already given them 1.25%. It's already done it. Not a quarter, not 50, 1.25%. It's not helping. And that just makes sense, right? Because, right, I've already loaded myself up with debt. And now, eventually, as Kramer says, right, you've got what the real economy is saying, and now what the stock market's at, and he goes, one of them is wrong, and it's not the real economy. And again, I think this is what we're seeing here. You look at gold, there's a reason why it broke out. Now think about this. We were here in 2016, 2017, 2018. Gold's at a 6-year high. By the end of this year, before this year ends, I think we're going to be at 8-year highs, and we may be at new all-time record highs next year. 800-951-0592. BUCU, $20 Libs and Saints, $1,475. Put them away before you get some more Jack in that coffee. We'll be back on Monday.